everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest today is Robert Maltbie. He is the CEO of Singular Research. Robert, it's great to have you here.
Thanks for having me, Mike.
Now, I know a lot of your work is focused on the small cap sector. I'd like to start off just by getting sort of an overview, sort of a macro snapshot of, what you're sort of seeing now in terms of the economy, maybe the major trends as you see it through your work, your research.
You betcha, Mike. So our picture is moderately bullish, down from more aggressively bullish. We're seeing some negatives lately. We're seeing earnings flatten out, up 1.5%, which is not too encouraging.
Not a lot, right?
Some of the guidance is coming lower too. And if you look at the expectations for the next 2 quarters, they're coming in lower too. Mm-hmm. So, we're a little bit concerned about that. We, on the one hand, we think the flows into the market that's holding the market up from the mutual fund complex has been huge.
Right.
You take that away, we get a little bit nervous. Actually, we look at valuations. We don't see anything special there overall in the market. You've got 16 times earnings on a normalized basis. Yeah, that's about a historical average. So, the only justification now is, bonds. Bonds are still overpriced. They're getting hammered now, and a lot of investors are getting their statements and thinking, maybe it's time.
This is finally the great rotation that we've been hearing about for years.
About $50 billion last month, Mike, came out of bonds into stocks, and money market funds stayed stable. So it looks like that trade's starting to happen. The thing you wonder about is this just a short-term trend, or is it something longer? That could go on. We just don't know.
Now the small caps are usually a good harbinger or a good leading indicator of the general economy. Okay, yep. That's a good way to look at them. And also, you said you're getting a little bit cautious now, but yet the market has had a pullback. How much of that pullback has already discounted the potential for a slowdown there, or are we, expecting a lot more there?
That's a great question, Mike. I think, the market's off about 4 or 5% in a stealth fashion in the last couple of weeks. This is August, right? A lot of people taking time off. So it's tough to absolutely say how much is discounted. The question of a slowdown is a good one. We actually think the economy's got a pulse now for a change without government stimulus. It's starting to breathe on its own. We look at something that it's a little bit analytical, but we look at adjusted M2. The growth of money supply. We all talk about the QE forever, right? But that's not the real story.
Right.
The real story is, all this money, but is there any velocity behind it?
Correct.
And in Japan, we knew that there was money, but no velocity. It just didn't do anything.
Correct.
Well, the velocity here has been low historically, but it's starting to pick up a little bit. And the other thing we offset that with is, what is GDP growth now? I mean, so you factor those in, and is there more money coming in or not after you factor those in? Actually, we're seeing that it is about 2%. Not a lot, but some. So that does add to the argument of tapering coming up. Again, not a big positive to the market right now.
Yeah, I think that's what's going on. I think that tapering fear, which I think is an irrational fear for the same reason as why, and when everyone got all excited about QE, it didn't do anything to the real economy, and the taking away or the tapering, I don't think will have that big of an effect either. So, but as you said, I think there is some support under there. I want to talk to you because I know a lot of your stuff is contrarian in nature, and in terms of what you see in the raw material and commodity space, because we had the big run up over the last 7 or 8 years, then the pullback recently. That whole trend has cooled. Gold has come down, although we see it coming back a little bit. Are you picking up any signals there? Any signs there?
We actually are, Mike. After being out of favor for quite some time, we're seeing some technical support. Stocks that we follow looking like they're making a bottom and holding up and actually starting to pick up on the taper. Now it is August, so we're not going to go out and bet the ranch on that, but it certainly is an improvement from the down that it has been.
Now, gold stocks have been hot, right?
Yeah, they have. They've actually have rallied in the past week where the market's coming down. So it's interesting. A week doesn't make a trend for sure. But the whole key to the metals, we still think, is China.
Right.
Are they coming back or are they not? And who knows? But certainly the latest indications show things aren't as bad as thought. And they were on this program of self-production, self-distribution, and not consuming all the materials they were before, trying to become more of a net exporter. Well, we think that could finally be bottoming out, and we're starting to see that reflected in some of these sectors in the metals. So who knows? But it looks like the formation of a bottom at this point.
So what about, we have also coming up next month, some potential time bombs for the market, for the economy. We have the debt ceiling issue. It looks like both sides are really digging in there. We could have a pretty ugly showdown, which could lead to a lot of volatility. I know you mentioned August as being a thin month. Traditionally it's summertime, and then we go into this period where you got a lot of potential time bombs. How do you play that as an investor?
I think you got to hedge it, particularly when you look at the last 12 months. Our sector, small caps, up 30% for the last 12 months, and I would bet you, historically, if you go back and look at 12-month rolls in the next quarter going into September, they're not so good. So, you're coming into August, September, early October, seasonally the worst period for the market, setting up for November through May. So, after this run, with these factors you're talking about, sequestration, the budget,
right.
You name it, and earnings not so hot. Look at the guidance by Cisco and Walmart.
Right.
You got to be a bit cautious. You at least got to take some profits.
So what about energy? Has energy been an area that has held up well? There might be some geopolitical factors in there now with Egypt and the civil war, you can almost call it there now. Energy?
Sure. Well, we think the real driver to energy is actually the underlying improvement in the economy, and get this, possibly an improvement in Europe.
Well, some of the data does point to that. I'm a little bit of a skeptic as to how sustainable that is, because it's still big time austerity over there, and I don't see how you cut and grow. It's never really been shown to work. But for now, we're coming off of a really, really weak bottom, so we got a little bit of growth.
And if you look at the spot market prices with energy, if they've held up pretty nicely. Now, again, we're coming off the summer season, and gas prices being up, and you look around, you see a lot of cars out there, you see a lot of people in the airports. Here, there's a lot of consumption happening, and if you look at the indicators, personal income's up 5%. That's pretty large. So people are feeling it again, and traveling more. So it's got to be a little bit more positive. As far as our research goes, Mike, we cover kind of niche specialty players that are involved with fracking. They're involved with some 3D seismographic research.
Do you have any names you want to throw out there?
Yeah, a couple of interesting names we like that have pulled back. If this correction, one is called Geospace, GEOS. What they do is they make they're land focused, and they survey for oil deposits or the extension of existing deposits using what's now 4D technology, and they've developed technology that's wireless. You'd think, wow, where were they? But it's finally hit this industry too. So they're the leader in that, and they're doing quite well. Another name that we like a bit, it's a little rich up here. It's run from like 12 to 20. We have a $24 target on it. There's a company called Flowtech, and what Flowtech does is they develop environmentally favorable lubricants for fracking. With the fracking, these drillers and machines get really hot. So they do that. They've been doing quite well. The stocks run a bit.
All right, good stuff. So a lot of cross currents, and we should be a little bit cautious, maybe kind of hedge going into it. I think that's a good idea going into September.
At least hedge it.
Robert, thank you very much for coming on the show.
Pleasure. Thanks for having me, Mike.
That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.